Good evening. Thanks very much for joining us on India Business Hour. I'm Shereen Bhan. The top story this evening, heavy rains lash coastal Tamil Nadu and Puducherry as they brace for cyclone Nivar to make landfall post-midnight. The Airport Authority of India has declared the suspension of flight operations at the Chennai airport till the 26th of November. The Met Department has announced that Nivar has intensified into a very severe cyclonic storm ahead of landfall. The Tamil Nadu government has declared a public holiday today. Our colleague Jude Sanet joins us now from Chennai. Jude, take us to the current situation. We are given to understand that 72 camps have been set up by the government to provide relief.
Right, and 1,200 people, according to Chennai Corporation, have checked into across 25 relief camps in the city. That's the latest that we're getting, at least as of 5 p.m. Even as the cyclonic storm has begun intensifying across the length and breadth of the city. In keeping with these preparations, the Chennai Corporation also informs us that key arterial roads in Chennai have been blocked off in order to help facilitate easier rescue and relief measures that will probably start a little later in the evening and continue through the night and also early tomorrow morning. Like you rightly mentioned, Shereen, we're also seeing flights suspended at the Chennai airport up until 7 a.m. tomorrow. Of course, a further course of action will be taken depending on how the weather pans out overnight and, of course, earlier tomorrow morning. Now, in the more crucial aspects of Chennai's preparedness to fight cyclone Nivar, what we are also picking up is the fact that there has been a gradual release of water from the Chembarambakam reservoir, which was at the heart of the 2015 floods. As of 12 noon today, 1,000 cusecs of water was released from that reservoir. But what we are picking up is that 3,000 cusecs of water will be released from the Chembarambakam reservoir. No reason to alarm, but it's just indicative of just how much water levels have risen in the city on account of heavy rainfall through the greater part of the day. So the city getting prepared, but like we have been reporting, the worst is yet to come, given that the rainfall and wind situation has pretty much been, at bay, at least for the greater part of today. Just how much rainfall and winds we see overnight continues to be seen, even as rescue efforts will continue through the night and early tomorrow morning.
Jude Sanet, many thanks for joining us. You stay safe. That is our colleague reporting there from Chennai on the state's preparedness ahead of Cyclone Nivar making landfall, which will be later tonight. Let's take a look at some of the latest headlines on the COVID front. India's coronavirus tally has now crossed the 92 lakh mark with an addition of over 44,000 new cases. Active cases have also failed to hold the downward trend, rising by over 6,000. Meanwhile, single-day recoveries have fallen below the 40,000 mark for the first time in 4 months, and the death toll has risen by less than 500 for the second straight day. On the testing front, single-day figure has risen to around 11.6 lakh. That's the highest level in the last 2 weeks. The centre has issued fresh guidelines reiterating that there shall be no restriction on interstate and intrastate movement. The Home Ministry has cautioned states against imposing any lockdowns outside of containment zones. The Punjab government has reimposed night curfews in cities and towns starting the 1st of December, also doubled the fine for flouting COVID-appropriate behaviour to 1,000 rupees. The night curfew will remain in force from 10 p.m. to 5 a.m. Maharashtra exempts all duty cabin and cockpit crew members of all airlines from compulsory COVID tests. Airlines have sought the exemption, citing operational challenges. Senior Congress leader Ahmed Patel dies at the age of 71. He suffered multi-organ failure and complications due to COVID-19. Prime Minister Modi and Congress Chief Sonia Gandhi expressed their condolences. A local circle survey highlights that 88% Indians now claim to know at least one person in their social network who has been diagnosed with COVID-19. This compared to 31% in the month of July. Local circles has also observed that many people are reluctant to get tested for COVID despite showing symptoms. CNBC TV 18's Newsbreak confirmed in a bid to boost infrastructure projects, the Union Cabinet has cleared infusion of 6,000 crore rupees into the debt platform of the National Infra Investment Fund. This was part of the stimulus announcement made recently by Finance Minister Nirmala Sitharaman. The infusion will be made over 2 years, and this year will see 2,400 crore rupees being infused.
ये जो नेशनल इन्वेस्टमेंट एंड इंफ्रास्ट्रक्चर फंड है, इसमें आज के कैबिनेट ने निर्णय किया कि 6,000 करोड़ रुपए का निवेश करेंगे। 2 साल का ही प्लान है ये। अभी जो 6,000 है, इस साल पहले 2,400 करोड़ रुपए है और अगले साल बाकी मिलेंगे और उसके द्वारा ये काम पूरा हो.
Well, that is the Cabinet's decision. More decisions coming in. It's also approved nearly 2,500 crore rupees worth of foreign direct investment in ATC Telecom Infra. ATC Asia Pacific was the investor in the company. This is one of the big stories coming in. The government has notified the scheme of amalgamation for Lakshmi Vilas Bank after the Cabinet's nod. The crisis-hit lender will be merged with DBS Bank India effective November 27th. Lakshmi Vilas Bank shares will be written off and delisted. Ritu Singh joins us now with more. Ritu, now we have a date, the 27th of November. What does it mean now as far as customers are concerned?
Well, Shereen, to begin with, for the depositors, there couldn't have been better news. I mean, this is lightning speed with which RBI has executed the whole scheme of amalgamation and the supersession of the board, and then, merging it with DBS, where initially, when the bank was brought under moratorium on the 17th of November, it was for a period of 1 month. But now, with the scheme of merger coming into effect on the 27th of November itself, within 10 days, all the restrictions on withdrawals for customers, for depositors, they will completely be lifted, which means, beyond these 10 days, there will be no restrictions whatsoever on the customers. So that is the one big news coming out of this. But that said, yes, the government has notified the official scheme of amalgamation, and we've compared it with the draft scheme, and it's pretty much the same as what was outlined earlier. What we're also given to understand is that the withdrawals of 25,000 crores, that, as I said, will also be removed. Customers, of course, will be protected. They'll all become customers of DBS Bank. All the branches of Lakshmi Vilas Bank will start operating as branches of DBS Bank India from the 27th of November, but shareholders will be left in the lurch, and that is how it is with the risk capital, the equity capital, which takes the first hit. So no respite for shareholders either. All the equity will be written off. The shares will be delisted on the 27th of November. That is as per the final scheme, and now we're given to understand, in fact, from some of the large shareholders of Lakshmi Vilas Bank, that they will study this final scheme and do expect, some of them to perhaps, either question RBI or, to challenge the scheme of amalgamation in court because, of their interests being affected now.
All right, Ritu, many thanks for joining us. So importantly, as far as consumers are concerned, the moratorium will lift ahead of that previous deadline. So now on the 27th of November, and as Ritu was pointing out, that is now the effective date of the scheme of amalgamation. The centre is planning to take steps to ensure that BPCL's LPG consumers continue to get the benefits of the subsidy scheme for up to 5 years post the company's strategic sale. Anshu Sharma, who broke that story, joins us now with more. Anshu, what's the government likely to do?
That's right. We understand from government sources that Oil Ministry has decided to keep BPCL as a divested entity for 3 to 5 years period to help in continuation of LPG subsidy post stake sale. Now, the idea is to grandfather the subsidy regime for BPCL consumers, which is close to 7.3 crore in total, and during this period of 3 to 5 years, that will be government's agenda. Sources have told me that Oil Ministry is likely to seek a cabinet nod for grandfathering the transfer of BPCL's LPG subsidy consumers. BPCL has 7.3 crore LPG consumers, and we learned that transfer of BPCL's consumer for subsidy is likely between IOC and HPCL. Now, IOC already has LPG consumer base of over 13 crores and HPCL has about 7.8 crore. Now, all this will happen only when there's a suitable bidder for BPCL strategic sale. As we know that government has received multiple expression of interest, which also includes Vedanta for stake sale of government stake of about 53%, which could garner about 44,000 crore rupees under divestment target, which is 1.2 lakh crore for the current financial year. Back to you.
Well, Anshu, from one exclusive to another this evening, let's talk about the other story that you're following, the crackdown on Chinese apps. The government now plans to ban Chinese apps, and we are given to understand that the telecom department has written to internet service providers to block more. Anshu, what are you picking up on that front?
That's right. Ministry of Electronics and Information Technology has identified 47 more mobile apps for blocking. Now, these apps which have been identified for blocking is under the Section 69A of Information Technology Act, and the government has taken action based on the inputs regarding these 47 apps for engaging in activities which are prejudicial to sovereignty and integrity of India, the defense of India, security of state and public order. Since June this year, the government has blocked 220 apps of Chinese origin. Just a day back, it blocked 43 apps, which included many mobile apps from Alibaba company like AliExpress, Alipay, amongst others. We learn from sources that Department of Telecommunication has written to the internet service providers to block these 47 mobile apps. Some of the apps include Share IT, Beauty Plus, Beauty Cam, Makeup Camera, games like Clash of Queens, Clash of Kings, amongst others. Clearly, there is tension brewing between India and China that these apps are being blocked. Back to you.
All right, Anshu, thanks very much. So more apps on the banned list. Responding to India's latest ban on mobile apps, the Chinese embassy in India has claimed the move violates WTO rules. It's also said that China has always required overseas Chinese companies to abide by international rules. Goes on to saying that it hopes the Indian side will provide a non-discriminatory business environment for all market players. Now, the central government has imposed a penalty of 25,000 rupees on Amazon. Sources say the country of origin was not listed on some products sold on the platform. That is now essential as per the new regulation. Another e-commerce major, Flipkart, was able to show evidence and was hence not penalized. Mugdha Warrier joins us now with more. So, Mugdha, take us through what the details are of this proposed action.
That's right. Government sources tell us that the Consumer Affairs Department has slapped a fine on Amazon for non-compliance with the rules around displaying country of origin on all packaged products being sold on e-commerce platforms. Now, remember that this is the first offence that has been identified by the Consumer Affairs Department against Amazon, and so the fine right now stands at rupees 25,000. But for subsequent offences, the fine could increase and could also go up to an imprisonment term. We understand from sources that this notice of the fine was sent out from the department on Friday last week. We reached out to Amazon for comments. They've not responded to our queries, and we still don't have clarity whether Amazon has received this notice from the Consumer Affairs Department. But remember that last month the Consumer Affairs Department had asked both Amazon and Flipkart for an explanation on whether they're displaying the country of origin on all products on their platform, and had sought several details. Now, officials tell us that Amazon was not able to show evidence of the country of origin label on several products on its platform, while Flipkart, however, was able to show evidence for the products on its platform and hence has been spared and has not been fined. Sources also tell us that both Amazon and Flipkart have told the government that they have delisted several sellers and have taken down several products from the platform over the last few months for not complying with the country of origin rules. However, we don't have clarity on how many sellers and how many products were impacted. But remember that these rules have been in effect since Jan 2018, but the companies, e-commerce companies, have been facing heat and pressure from the Indian government over the last few months, especially since the India-China border tension. And we understand from sources that the government has also told all the controllers at the state level and the union territory level to continue with this investigation and to ensure that e-commerce companies are complying with these rules.
All right, Mugdha, many thanks for joining us. Time for a break, but up next, players in the pharma sector offer a lukewarm response to the government's. Here's a quick check of some of the other headlines that we're tracking this evening. Indian equities have come off their record highs and snapped that two-day winning streak. The Sensex and the Nifty closing with losses of 1.5% each. The Nifty seeing its biggest one-day fall in nearly 5 months, and the Sensex down over 1,000 points from its record high. Kerala and West Bengal have become the latest states to accept the centre's borrowing proposal to meet GST revenue shortfall. They will get around 10,200 crore rupees through this window. With this, 28 states and union territories have accepted the centre's terms so far. India's GST collection may cross 1.1 lakh crore rupees in November. Government sources say strong GST mop-up is expected on the back of festive season sales and the revival in demand. Domestic air traffic continues to see month-on-month growth. Latest data shows an increase to around 2.4 lakh passengers so far this month versus 1.6 lakh for the same period in October. But travel portals warn that mandatory COVID testing may lead to a drop in traffic. SpiceJet chairman Ajay Singh says the demand pickup in the aviation sector has been a significant one. He expects holiday bookings to spike in the next few days also highlights that the airline's cash burn has come down to 1 crore rupees a day.
The demand pickup has been pretty significant. If you remember, we started flying again after the lockdown on the 25th of May. And on that first day, we had about 20,000 passengers that flew the entire network, India network, for all airlines put together. Now we are close to about 220,000 passengers flying. Of course, some of this is aided by the seasonal demand and festive season, etc. But we have seen a pickup. It's tough to say, on a daily basis what it was, but it was really significant. As you saw that in the first quarter, we lost about 500 odd crores. That was pretty significant for us. It was close to, we were losing about 5-6 crores a day at that point of time. Of course, it's come down significantly. If you looked at the results of the second quarter, we lost about 110 crores in 90 days. So the burn rate was already down to about 1 crore a day. We expect that that will be lower in this quarter.
Burn rate down to 1 crore a day. You can catch my conversation with SpiceJet CEO Ajay Singh and Spice Health's Chief Avni Singh at 10 p.m. right here on CNBC TV 18. The pharma sector has so far shown a mixed response to the government's production-linked incentive scheme under its Atmanirbhar plan. The government has approved 15,000 crore rupees for the pharma sector to boost local production. Sonal Bhutra joins us now. Sonal, why the mixed response to the PLI scheme?
Thanks a lot for that. Well, pharmaceutical companies, they have given a mixed response to the production-linked incentive scheme. Let me start with Divi's Labs, the biggest player in the API space. And the company says that PLI scheme is less applicable to the company. However, they are still trying to understand the API benefits that this company and scheme has laid out. Moving on to Solara Active Pharma, the company says that they are applying for the PLI scheme and recent amendments, according to them, are quite positive. Moving on and talking about Laurus Labs, that company has done really well in terms of stock price performance. They think that PLI is a good step and they are evaluating this scheme. Granules, on the other hand, they are still evaluating it, and they say that higher incentives are needed so as to get more attraction as far as investment is concerned. Aarti Drugs, well, that stock has surged, in fact, 7 times from the lows only on the back of this API theme. They are planning capex of around 150 to 200 crores in next 3 to 5 years in this particular scheme itself. Moving on to Newland Labs, they think that out of the 53 APIs in drugs that are mentioned, 1 to 2 APIs should benefit, but they think they need more clarifications as details are not yet clear. Moving on to IOL Chemicals, they are working on 4 to 5 products within this scheme. Lupin says that it is, of course, a step in the right direction, and around 6 to 7 products they are reviewing closely so as to take a decision. Ipca Labs says they are in fact ready with an application to be submitted for 2 synthetic products, and they will be doing as soon as possible. Alembic Pharma says that PLI scheme is not a priority for them and they do not see themselves as a major API player, and that's why not so much interest coming in from Alembic Pharma. Lastly, Aurobindo Pharma, they've been saying it for quite some time that they're evaluating the PLI scheme, and few products appear interesting. They will take a step or they will file an application if they think there are enough positives in this scheme. But all in all, the gist is companies need more incentives, and they are still not very clear as to what the benefits this particular scheme provides. So we'll have to wait and watch for this space.
Want more and want more clarity too. That's the view coming in from the pharma sector when it comes to the PLI. Sonal, many thanks. Now, the third edition of the Global Reinvest Meet will be held virtually tomorrow. The meeting, which will be inaugurated by the Prime Minister, will provide an international forum for investment promotion in renewable energy. As climate change takes centre stage in global policy making, we examine the transition to clean energy and the challenges that lie ahead. I spoke with Sumant Sinha, Chairman and Managing Director of Renew Power, Chairman of the Energy Transitions Committee, Lord Turner, and Power Secretary S.N. Sahai about investments and reforms needed to make this transition sustainable. Listen in.
We need to actually give a very significant line of sight to investors. Today we're investing $10 to $12 billion. We need to do $30 to $40 billion. That capital has to come from somewhere. A lot of it has to be equity. Some, obviously, large part of it has to be debt as well. But that capital will only come in if that capital gets reasonable rates of return.
A new policy is being worked at, and I think we will be having consultation with, our stakeholders such as Renew Power, etc., on this new system. So the discussions are over. It's now post discussions. We have taken people's advice and views on board, and the process of drafting is on. I should think that the draft will be ready in the next 3 to 4 weeks.
A lot of the investment funds will come from people simply trying to make a good return on the renewable technologies, which are increasingly going to be the cheapest way of producing electricity. A lot of the flows will happen automatically. Where I think there is a challenge sometimes is in some of the developing economies where the cost of capital is higher than it is in the developed.
And you can catch the entire conversation with Renew Power Suman Sinha, Power Secretary S.N. Sahai, and Lord Turner, Chairman of the Energy Transitions Commission and Senior Fellow at the Institute of New Economic Thinking at 9:30 p.m. right here on CNBC TV 18. With that, it is time for us to wrap up this edition of India Business Hour. From all of us here, goodbye. Many thanks for watching. Stay tuned. The news will continue.